Welcome to Simplified Profits, ladies and gentlemen. This is Anthony with over 23 years of experience. We're going to take a look today at some quick scans. The overall market pulled back. We went over in our previous video. If you were watching the S&P 500 on Friday, when it got close to that 50-day moving average at the bottom of that candle, that wick, this was about 20. It was definitely very low, which had us watching for an entry point, and we were talked about that in the last video, how we watched a 3-minute and waited for that to break out and actually entered there. Now, let's take a look at some actual scans out there and see what we got going on. Because usually, if you're into entering single stocks, which it's rare that I do, it's really good, probably a good entry time buying opportunity for some of them out there. We got a lot that has pulled back. Now we only got 24 in the S&P 100. I could pull up the S&P 500, but we would have a lot more to go over. So if you need a good scan, let me know, post in the comments, and maybe we'll pull that up and let you kind of screenshot it and go through it on your own. But let's start off. We got it in order by the stochastics. What's oversold the most? That chart is S&P 500. So it looks like PepsiCo, which isn't anything I would really touch. I mean, I know it pays a dividend, but this thing has been, if you look over the last 2.5 years, you're pretty much sideways on it. If you're looking for a swing trade, possibly, you might grab another 5% on the way up. It is testing that 200-day moving average, but there's probably better places to put your money for a swing trade out there. So right now we also got Medtronics. That's another one wouldn't really touch. Should have been out of that when it crossed under the 200-day moving average. If you know our rules and how we trade, we would have been out of that when it crossed under the 200-day moving average. The only time we would have traded it would have been the swing trades going up when it crossed over. But right now that would be a no-go. It's really looks like it's rough even holding that. MasterCard, and you'll see once we go through these, some of the best charts out there right now are financial services because they are killing people with these rates. But MasterCard, Friday would have been a good entry point on that. If that's a company you like, something you want to get into for a swing trade to the previous high, you're talking maybe 5%. If it goes up to the last previous high before that, you're talking about maybe 10% swing. Not sure if it's something I would mess with. Like I said, I usually swing trade leveraged ETFs, sometimes calls and options, which we spoke about last video. But BlackRock looks like Thursday or Friday would have been a good oversold. These are all oversold bullish stock charts, ladies and gentlemen. Is what we're looking at now, and then we're going to look at some that crossed over the 200-day moving average, and we'll touch base on that here in a minute. But BlackRock, I hate the company overall, but you may have a good 6 to 10% swing trade on that. Morgan Stanley, if you've held them over the last 3 years, you're sideways, maybe up a little bit depending on where you entered. But we like to see things trending up. Good 10-year growth. I don't like holding sideways bullcrap. If I want to enter something that a good long-term play, I'm looking for good long-term growth, good bullish trending up chart. That's not it for me. And we got Kraft Heinz, same thing. Now these scans wouldn't pull anything under the 200-day, but you can see this closed right up above the 200-day. We'd like to see them swing above the 200-day a few more times. Once again, this has been a sideways stock for you over the years. Nothing really to be impressed with or want to enter. Same with Dow here. You may have a swing trade up. UNP, wouldn't touch it, but I think they pay a decent dividend. Now Colgate, we spoke about them before when they broke up, pulled back, and stock chart started looking pretty bullish. I think we spoke about them. Well, actually, we ain't done a video in a while. That was beginning of April. That might have been the last April video. but definitely a bullish looking chart shaping up to be. They kind of broke out of that range. Had a great day on Friday. That's a company you like. Maybe a buying opportunity. Merck, not a fan. Stock chart's kind of nothing I would touch. Visa, another credit financial service. You can see kind of may have some swings coming up in it. I don't think it's anything I'd put my money to work for the long term. Amazon pulled back. May have a good buying opportunity here. Would have been a better buying opportunity when it crossed over the 200-day moving average. You'd be up 65% in a year if you bought it then, and you would have been out. Follow the 200-day moving average, ladies and gentlemen. You can see here when it broke up, I mean, that's another 60% a year. Saved yourself 34% loss in a year, and then you'd be back up 67% a year. So 200-day moving average is a key indicator in buying and holding stocks. For me anyway, do your own thing if you want to. 3M, that crossed over the 200-day not too long ago. This might be a good buying opportunity if you like the company. Crossed under the 200-day back then, and since then has dropped 50% over the last 2.5 years. So if you would have got out when it did that, you would have saved yourself a decent loss. It's pulled back to the oversold territory. It's had enough swings over the 200-day. I think it'll hold it. It may be on. Let's look at the weekly chart. You may have some room to run on this. May give you a good year going forward. Maybe a good 50% or even 70%. Check out the fundamentals. Make sure it's paying a good PE and going in the right direction. The chart looks like it is, though. Let's see. We got AMZN, healthcare. Yeah, I don't know. Not really impressed with the stock chart too much. I mean, that drop right there is pretty recent. Crossed under the 200. Procter & Gamble, straight old school name. I mean, company's been around forever. A ton of people hold it as far as just in funds. Pays a decent dividend. Maybe a good time to enter if that's a company you want. A little bit more defensive. Wells Fargo, once again, the financial companies charts are looking nice, looking like they're about to bounce. So XLF, let's just jump into an ETF real quick. If you're looking for an ETF, that may be, banks may be where it's at right now. Not my favorite, but I hate banks just for the reason they make money off you paying compound interest, not earning it. Thermo Fisher, great company. Been around forever. Could be a good time to enter, but it's been kind of sideways for the last 2 years. So, if you like a good solid name, being sideways may not be, an issue for you, but I like stuff starting to trend up. For instance, like Citi, when it crossed over the 200-day. If you would have got in the first pullback after that, you'd be up 20% in the last couple months. Maybe a good entry point for it now. Capital One, all these financial sectors are starting. Goldman Sachs, that's been looking like a monster, I think. That breakout right there would have been a decent, or that pullback right there. But this thing may continue to run here. Chart's looking pretty bullish. And it's a good pullback opportunity. Yeah, Kinder Morgan. Yeah, pretty sideways chart over the last years. Better places to put your money, probably. PayPal. I think last time I covered this, it was my favorite swing trade right there out of Bullish Oversold, but wasn't much else going on out there. So those are out of S&P 500. Let me do that, or S&P 100. Let's pull up 500. See, there's 109. I'm not going to go through all those for you, but look at the tickers. Let's go down some of them that wasn't in our other list. Tyson. So just kind of take a quick look, take a screenshot. I'm going to scroll through. kind of click on some of them for you. I got that flagged, I don't know why. But that is, you got 109 possible buying opportunities out there. XYL, this company's just been crushing it. I think we've covered that before. Look at that cross over the 200-day moving average. You'd be up 35% in 6 months on it. So we're going to look at that overall, just crossing over the 200-day moving average. All right, that's all 109. I'll scroll through, you know, take a screenshot of it, check it out later. But right now in the S&P 500, we got 28 that is crossing through the 200-day moving average. Now this isn't what I like when I say crossing over the 200-day moving average. I want to see a nice pullback after it's dropped below it, and then a cross back up. Like not really concerned about that, but if you see something, well, I'm sure we'll see it in a minute. Dollar General couldn't hold the 200-day, struggling to hold the 200-day. Didn't really look too bullish coming out on those swings. So it came out, dropped, lower high, and just faded. Struggling to hold it now. Would have been out since then, which would have saved you 43% a year. So this is one of the kind of utilities have been beaten up over the last few years, mainly for rate environment. They may be starting to cross back through. This has been sideways, so I'm not really talking about stocks like that are sideways, just trying to bounce up and down and up the 200-day moving average. We want to see some kind of panning out here because I want to see the bigger picture, you know, last year or so. I believe Warren Buffett's been holding this for a while. Kind of some sideways action. So if this red, I don't know anything about it, but if that comes, starting getting some bullish swings, all right, you may see that start shaping up, but nothing really out there as far as crossing back up over the 200-day after a good pullback, which I thought for sure I seen a few, which is kind of why I pulled this scan up, but I'm not seeing them. Did I miss one? Maybe not, but let's do the high cap 1000. And work from here. And just follow with me here. Just kind of looking for any that look like they are coming back from being oversold, or coming back from being under for a minute, which I think the only one we really seen was in the scan on Bullish oversold. Keep an eye on utilities. They may, like I said, start bouncing back. So that's crossing through right now. Nothing I really see. But let's check, because I'm pretty sure one of these. Let's go back to S&P 100. Which I hate finding right here. What one was it? Citigroup. Kind of wasn't CL. Wasn't down. Man, maybe I'm losing my mind, ladies and gentlemen, but I don't think so. I thought that was a good one. Cross through. Triple M, that's what I was thinking about. That was it. That's the one I seen that may give you. We've already looked at the weekly. Let's look at the monthly. So it's oversold on the monthly, oversold on the weekly. Or I'm sorry, overbought. So it's overbought on all those, but it's oversold on the daily, which is a good entry point. But just keep an eye on it because you may see some consolidation as it goes up. But I mean, you got a lot of room to recover on this. It's crossing over the 200-day moving average. You've seen the other ones, and I think it'll hold it. It's crossed and had a couple swings. So you see how the 200-day moving average works. Last time it crossed above it, got about 25% in 10 months. So that is it, ladies and gentlemen.